Greetings all, Ben here from East West. Just going to take a weekly look at interest rates. This might be my last rate video for quite some time. Didn't really get much traction with the last one, and if people aren't interested, I'm not going to do it, quite simply. But obviously a fair bit going on in the rate market this week, so let's dive in and take a look. So just starting off here with TLT, and I spent a lot of last week ranting and raving about how I couldn't see a bottom unless something changed. Well, something did change, just wasn't anything that I expected. Obviously the rise of geopolitical tension has probably generated a bit of a flight to safety, I think, and the way the bonds have traded this week leads me to think I'm not prepared to call this a bottom, but I'm not prepared to say it's not a bottom. It's very innocuous as something that looks like a bottom. Usually I'd look for some sort of hammer or something like that, or something a little bit more concrete. So like I said, I'm not prepared to say that is the bottom, but I'm not prepared to say that is not the bottom. Probably not much good to you. But we retain this. The same thing I was pointing out last week. We have got divergence going on. So if this does prove to be the bottom, well, that's going together quite well in that regard. And we're just getting the true strength index here beginning to turn back up. The Williams %R is just beginning to creep a little bit higher. Can we push back up? I guess that's the question. Well, I think we need to get back to the Tenkan-Sen at least to find a bit of balance. But things are pretty fraught at the moment, right? So things can look vastly different on the open on Monday morning or Sunday night, depending on where you're watching from. But for right now, I remain pretty wary that this is not the bottom. But like I said, I'm not prepared to say that it definitely isn't. Just looking at this on a daily, we found a bit of balance, but and we came down and retested the Tenkan-Sen on the Thursday auctions. But we've got this sort of pretty indecisive doji candle here to finish off the week. These gaps are probably, if you're long, these gaps are the first things you want to see filled in. So what you really want to see in the next sort of coming weeks is for the market to be able to get back up and test these zones. Obviously, getting on the other side of this cloud is a good thing, and the last thing you want to see is probably a TK cross. So we'll just get rid of this, but what I'm saying is what we want to see is the Tenkan-Sen, this red line, which is the fast moving line, get back above the Kijun-Sen, the slow moving line. Okay, that would be a bullish signal. But there's a fair bit of water that's got to go under the bridge before we get to that. The other thing is the Chikou span. You want to see that get on the other side of these candles. I think if we can get on the other side of these candles, and it's going to take a bit of time, then we're in a position to close these gaps, challenge the cloud, and then we're back here going, well, that bottom, that's pretty innocuous as a bottom, but I'm definitely not saying that's definitely not the bottom. I wouldn't say that. There's reason to think that this could be in the process of turning over now for the reasons that we looked at. I just don't remain confident that this is the bottom as yet. I need to see a fair bit more before I put a flag in the ground and say that's the bottom. So just skipping over here to the 10-year yield, and we know we've come down a bit this week. Like I said, I'm geopolitical stuff, but we haven't even got close to the Tenkan-Sen yet. But we do have this divergence going on, and this is obviously just a reverse of TLT. We've got the true strength indicator is starting to roll over, so there is reason to think that the top could be in sight. Now we've had the Fed this week. Some of the Fed guys sort of coming out and saying, well, maybe we've done enough, but then we've got to balance. We've got to weigh that up against the bad auctions, the CPI, the services component of the CPI, which isn't going away. Against the backdrop of the flight to safety on the risk of what's happening in the Middle East. So this is Saturday morning my time, or Friday evening in the Northern Hemisphere, and we just don't know how things could escalate over the weekend. It's the way the bonds traded to me the last 2 days, and I'll skip over and have a look at the note futures in a sec. Suggests to me that that there's definitely some flight to safety going on, and people aren't super keen to be short price or long yield just in the last few days. which is completely understandable because it's a very volatile situation. So this is just an hourly chart of how the market's traded through the week. So, here's the Monday morning open, where obviously we gapped higher on the geopolitical risk, and we more or less traded up most of the week, but we had, of course, this one big move back down through here, and that was CPI mixed with some badly received auctions. Okay, so we did have a few auctions this week, but they weren't well received. They traded with tails, and the bid cover ratios were low. So all that suggests is that there's just a bit of a lack of demand to buy the US bonds, and that's why we just have to wait and see, because if the situation over there in the Middle East improves somehow, there's some sort of ceasefire or peace, which I've got to say looks pretty highly unlikely from what I've seen and read, well, this could turn around very, very quickly, because the underlying things that are still around in the rate market are still there. But while ever there's that tension in the air, it's going to drive a flight to safety. And you can just see here that we just came right back down to test where we started the week. Okay, and that's on the bad auction and the CPI. But the fact that we just bounced out of here so easily, okay, and we came right back up into this area here, okay, these sort of bottoms that were made before the CPI number came out. I mean, that to me is just a Friday. I don't want to be short notes. I don't want to be short the note market. That's what that suggests to me. But so, like I said, I mean, Monday morning we could start here and do this, no doubt about it. But at the same time, some sort of peace deal gets brokered, then everybody who, we could easily then start somewhere like this and start doing that. It's very up in the air. But this just looks like flight to safety Friday. I don't want to be short over the weekend. So we just have to wait and see what happens this weekend. Just looking quickly at the 2-year yield, we're still in this little wedge here that's going up. But once again, the market to me just looks like it's struggling here above 5%. And, the same thing, the RSI is not progressing back up. It is still turning down. So even though we've got this, almost looks like a hanging man, really. Probably just to me suggests that the flight to safety is more in the long end of the US curve. I'm still sort of thinking, especially with what the Fed is saying, I'm not anticipating this is going to break much further. I'm really more thinking that this is going to come down. That's just my anticipation. But I'll just trade it level to level as the market tells me. But right now, I just don't see any reason to change the view that we're struggling here. The market is just not very happy above 5%. This is wedging in, and that before long we're going to lose this, and then we're going to head back down. The RSI is just telling you that things are struggling. I mean, the caveat on that is this could drag on a bit longer, because maybe the Fed aren't going to tighten anymore, but rates are higher for longer, and they're on hold. And that the rate cuts that people are looking for aren't going to come as soon as they hoped, and this just starts just going sideways and going nowhere as we just hover. I mean, that can't be ruled out, of course, but as things sit, I'm just thinking that this wedge is getting close to playing out, and that we're going to lose it and we're going to start coming back down, but we'll see. So we had an interesting week in the curve, and obviously the geopolitical risk, and this is just, the curve just tells you where the interest is. It's in the longer end, the 10 years. That's where the market's running to take some cover from the uncertainty. But you can see it's interesting, isn't it, that we've just come up into this zone, we've just tested, and we've just come back down. Now, I did point out that we did close last week above the cloud, and this week we've closed in it, but we've got this Kumo twist here, the cloud twisting. So I just don't know what, obviously no one knows what's going to happen over the weekend or the course of the next few weeks with the conflict in the Middle East. But obviously if that escalates badly, the curve, I'm not sure it's going to plummet, but it may not just do this either, because the movement across the rate market will probably be reasonably uniform if things get really nasty. Okay, because if people start thinking rate cuts and stuff are imminent, that it's going to happen. And I know a lot of people have been calling for rate cuts, but at the same time, I didn't see anyone calling for rate cuts because of, a conflict in the Middle East. So we just don't know what factors are going to turn markets around. And that's, and that brings me back to the point where I was ranting and raving about I couldn't see a bottom unless something changes. Well, usually what I've found is the case is that the thing that turns the market around is something that you never anticipated. So I didn't anticipate it, even though obviously in the Middle East it's a volatile area and there's always that risk. I mean, no one was talking about it a week ago. No one was talking about it, Wednesday, week ago. So maybe that's what does it. That's what turns it all around, and TLT rallies, and that's what gets rates all of a sudden getting cut. And I still think the curve is on the way back, and we're probably headed back to flat, back to zero, and probably beyond. But we might until the Fed actually come out and start making noises about that, we might just find that this comes back to test the convergence and the bottom of this cloud. It may even fall back out of the cloud. I'm not anticipating it, can't rule it out. But that is just how the curve sits at the moment. So just finishing off, going back to TLT on a cyclical look, the only thing I'd be worried about is, and it's not something I can rule out, but I'm more worried about this sort of thing, that we just get this push up and then we come right back off like that. I'm not saying that that's what's going to happen, of course, but I'm not seeing enough to make me 100% convinced this is the low. But like I said, I can't rule out that is the low. So we just need to, it's stating the obvious, but we just need to wait and see. But I'd be worried that there's just one more leg that comes down here somewhere and maybe test back into this big zone that we've looked at, which is, it goes way back. We go to a monthly here. Yeah, that we just come back and just test into this zone. Now, you could say on a monthly here, this looks more like a potential bottom on a monthly candle. That if we can just close the month up, well, then we do have a monthly hammer, and all of a sudden you go, well, okay, well, hey, this starts to look a bit clearer. We've got big divergence in a monthly hammer. That's what I mean. So the monthly is probably the close of this month will be probably more key, but that's what I'd be looking at. I've only just really seen that, but that's where I would sort of look at that and think, okay, well, hey, that's more a sign. If I saw that on a daily or a weekly, I'd be much more happy, but certainly on a monthly, that's a bit of a signal. 1, 2, 3, 4, 5. Even though a lot of people don't like Elliott, you could sort of you just use it to describe the market and what stage you think it might be in. So all we're really doing here is looking at a pattern, saying, well, we think we've got a 5-wave pattern, and we've got something here that looks like a bottom. So we feed all that into our decision making. It's just an isolated tool in the toolbox that would make you think, okay, well, that's just a little bit more supporting evidence to think that we've got a low in place here. But this monthly close looks really crucial to me. So let's revisit this at the end of the month and see what sort of candle we get here. Because as this sits, if we closed here and that was the end of the month, I'd be looking at this going, okay, hey, this is a candidate. That's the sort of thing I'm looking for. Okay, that would lead me more to think, yeah, this has definitely got big potential to be a bottom, especially the way that this is behaving. This bottom here to this bottom here, that's pretty good divergence. Anyway, look, I'll leave it there. So like I said, this might be my last one for a while. There's not much traction in this, so if I get more likes and subscriptions from it, then I can present my wife with that $3 check to show I'm not wasting all my time. But otherwise, look, best of luck. That's just how I'm looking at it. So let's look at this monthly close in TLT and see where we go from there. Thanks. Bye for now.